Hello, my fellow investors. Gold and value investing is an interesting topic. Most value investors don't like to invest in gold for very good reason. As Warren Buffett says, gold isn't a productive asset. And for years and years, along the entire history of human, gold is like a major investment. And today, value investors don't like to invest in gold, not in bullions, not in miners. I just wanted to bring a interesting perspective of Marie Eveillard. He's a French value investor, a very good one actually. He ran the first Eagle Fund like for close to 30 years with an annualized return of close to 16%, if I'm not mistaken. I just hear his perspective, and then I'll bring on the clip of Warren Buffett and Charlie Munger and their perspective on gold.
Gold.
Right.
First Eagle Global Fund, which you used to manage, has a maximum now of 10%
Right.
gold. You hold gold personally.
Yes.
What percentage of your portfolio is gold for you personally?
That's right. But for me personally, I don't have to account to anybody, except it's not as if
Yes.
I'm running other people's money. It's my own money. I have to account to my wife, presumably. But otherwise, I don't have to account to anybody else. And I was always worried about, mutual funds. You have you have a few wealthy people, you have a few institutions as shareholders, but basically you have, middle class investments. Money that, in essence, the owner cannot afford to lose because it's supposed to help finance children's education or retirement. All right. And I was, I sighed a sigh of relief when I stopped being responsible, because all of a sudden the burden was off my shoulders.
Yes. So therefore, for gold, you are free now to do
right.
whatever you wish to do.
And I have a bit more than 15% there. Combination gold bullion and gold mining
Yes.
stocks. Right.
And is that a statement on your part about the dangers that you see in the market? What does that represent?
It's a statement that, number one, I think there are risks which relatively few people seem to perceive. And number two, the stock market and other stock markets have more or less, tripled over the past 6 years. There is a price for everything. But because so few people seem to worry about the risks I see, and maybe they're right and maybe I'm wrong, the valuations seem to be on the high side.
At the end of every interview, we ask each of our guests, what is the one investment that we should all own some of in a long-term diversified portfolio? What would yours be?
My answer would be gold bullion. Not necessarily in an enormous size of a portfolio, but some. Right? Because I think it provides protection against extreme outcomes, and extreme outcomes may not happen, but at the same time they may.
Marie Eveillard, it is such a treat to have you here on Wealth Track.
It's always a pleasure.
So this is his perspective, and now I want to give you Warren Buffett and Charlie Munger's perspective.
Yeah, I would say that gold would be way down on my list as a store of value. I mean, I would much prefer owning 100 acres of land near here in Nebraska, or an apartment house, or an index fund. Gold, we'll say, was freed up 30 odd years ago, but it adjusted to a market that still, if you go back to 1900, you were talking $20 gold. Well, you take 20 to 400 in 100 years, the Dow went from 60 to 12 or 13,000, and then 12,000 or whatever it might have been in that same period, and paid you dividends during the time you owned it. It was 66, I think, at the start of the century, and I forget when it ended, but it's 11 or 12,000. And like I say, it was paying you something every quarter during that period. And if you own gold, you paid $20 in 1900 or thereabouts, and then we'll say you had it $400 100 years later, and in the meantime you paid insurance and perhaps some storage cost. It really is not a store of value, and I'm not arguing for paper money, but if you're worried about paper money, and I think it makes a lot of sense to worry about paper money over long periods of time, but it's just about the last thing I would want to own under those circumstances. A farm has utility, an apartment house has utility, a business will produce earnings, and to some businesses will produce them in real terms as they go along. I'd rather have the ability to sell people a pound of candy 20 years from now, and if they're dealing in seashells, I'll get an appropriate number of seashells instead of paper money for it. But I don't see gold as a store of value, and the truth is it hasn't worked very well. But forget about whether it's worked well the last 100 years or the last 50 years or the last 10 years. I see no reason, why it would work well in the future. I forget whether we're turning out about 3,000 or 4,000 tons of gold a year. We take it out of the ground in South Africa and we put it in the ground at Fort Knox or someplace, or in the New York Fed. And it doesn't do much along the way for anybody. So I don't know, Charlie, how do you feel about gold?
Well, I think gold and similar items, that was a great thing to have if you were a well-to-do Jewish family in Vienna in 1935, because you had hazards where that gold had enormous utility to you. But for Berkshire Hathaway sitting here in 2005, it just doesn't interest us at all.
Now, if you like this video, don't forget to smash the like button and to subscribe to the channel. Thank you very much.